The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Monday morning, just after 9 a.m. Eastern Time. We got about 30 minutes to go until the start of trading, and you got markets picking up on the positive side. You see the action on the S&Ps. Quite the acceleration into the close yesterday. We opened right where we kind of came into that acceleration at 315. And yeah, we've edged higher a little bit this morning. S&P's up about 8 points right now, trading at 39.77. We got the NASDAQ 100 up about 20 points, 11,703. The Dow up by 61 points, 33,800 right now. And we got the Russell barely in the positive by about 3 points as well. Bitcoin just been hovering around 17,000, right? Bitcoin for an extended period of time, kind of stuck at that price level. We got Ethereum at 1244. How about crude, man? We almost got a 69 handle on Friday's action. Remarkable. Crude challenging that low again this morning. We're just off that price level right now at crude, trading at 71.22. Boy, you take a look. You put it on a weekly. Let's put it on a daily to zoom in on the action. And yeah, you're talking about a pretty decisive area, man. Are we going to get down to price levels that we haven't seen since about a year ago? And you're talking about $62 and change before that market accelerated higher to 130. It's almost been a one-way trip since June. We're talking about 6 or 7 months, folks. And if you just back it up to recently, you're talking about in just over a month, crude has gone from $94 to $71. Remarkable pullback in that crude contract. We got gold sitting right at about $1,800 this morning. You're down $10 in the price of the gold contract. Back to a 15-minute chart. Take off some of these Fibonacci numbers here for some clarity. And yeah, you see gold chopping around on Friday up to 1818. We had a 1700 handle earlier this morning on gold, and we jumped to notes and bonds. We got a little bit of higher price and lower yield. Now the 10-year, keeping your eye on this thing, man, challenging the upper boundary of that channel line in the 10-year. We rolled over a bit in the last couple of days. Today, we're higher again by about 9 ticks right now in the 10-year. You jump over to the 30-year, you're positive by a full 30 ticks in the 30-year. And you can see, depending where that line lines up, and maybe that line's a little bit higher. It's an art, not a science. As you can see, they match up. Either way, flirting with the upper boundary of those channel lines for the 10-year and the 30-year. Let's jump over to the currencies. Dollar index backing off again, down about 11 ticks. You see the pullback from almost 115. Dollar index overnight was at about 105.20 this morning. Yeah, you give up. I mean, that's a solid half point, man. 104.70 for the dollar index. We jump over to the euro real quickly. Yeah, quite a rebound as well, from about 105 to 105.73 in the euro. And we'll finish it up with the dollar yen. Dollar yen trading at about 137 this morning. All right, what do we have going on? It's Fed week, folks. That's going to be a lot of the focus as we come in. Meeting starts tomorrow. Announcement Wednesday, 2 p.m. Eastern time. Press conference to follow at 2:30. It's going to be an interesting one, man. We'll see where we go. We kick off the week with a little bit of lower rates. We've got the 10-year up by 9 ticks, as I said. And jumping over right now, that is correlating to a yield on the 10-year. When you take a look at it as I glance over, 3.52%, 3.52. So quite a pullback from where we were, right? But still sitting at a pretty healthy 3.52%, the yield on the 10-year this morning. All right, jumping around to some of the headlines. Central bank moves in focus, okay? And ours, most importantly so to us, of course. But yeah, looking for clues. The Fed's projected to slow its hiking spree to 50 basis points. Now, it's going to be an interesting press conference, man. Chairman Powell has already hinted for the methodology as to why they would pivot. They're expected to. It's not a certainty, okay? We find out on Wednesday. But nonetheless, all odds indicate that they will go 50. It'll be a slowdown from 4 consecutive 75s. And we'll see what they have to say going forward. But I imagine it's going to be a lot of the same talk that we got recently in terms of his last appearance, talking about it might be time to slow. But as they keep saying, right, he keeps putting it out there, maybe higher for longer. It might take an extended period of time of staying at those rates to really get the impact they want. Though officials have said borrowing costs will need to remain restrictive for some time. Going to be a lot of that speak on Wednesday, I imagine. Inflation figure on Tuesday. We're going to get that one, man. Will that throw a little bit of a wrench into Wednesday's action? Yeah, we will find out. We're going to jump to that in a little bit, as that's the next article we're going to jump to in terms of CPI. Some of the takes in terms of the Fed, yeah, they've been aggressive, man. However, the last reading made the Fed believe that inflation has started to move in the right direction. Yeah, this is talking about inflation, the numbers that we're going to get. This means that they need to do less, as there is plenty more tailwind behind this, which will continue to push inflation lower. Well, we'll see where we go from here, man. We got a lot of data. Following the Fed, the ECB is going to announce their rate decision on Thursday. So we got Fed on Wednesday, ECB on Thursday. They may opt for a 50 basis point hike, as well as ours. Markets have also contended with decisions from the Bank of England, Mexico, Norway, Philippines, Switzerland, and Taiwan. So we got some central bank action, man. Federal Reserve and the ECB Wednesday and Thursday. The headlines, but yeah, you got some underlying Fed banks, central banks out there as well. So we'll see where we go, man. It's going to be an interesting one, to say the least. This morning, we pick up in pretty decent territory, man. To back things up on the S&P for some context here, we're basically sitting right where we were, to put this in a 10-day, right? There was your Fed speak, man. We got Fed speak, and then we got jobs. We're going a week back, okay? A week prior to last week. We got Fed speak on Wednesday. We got jobs number for the month of November on Friday. Wage gain through the roof, if you recall. And what'd you do? You gave back everything that you had from Fed speak, which is pretty remarkable when you have the market escalating 160 points to the upside in a matter of a day. And then you give it back by Tuesday, and we've just been chopping around right now. Even the action on Friday, right? Keep your eye on that action, because where did we trade to? Basically traded right to where we were prior to that Fed speak. So maybe the market kind of figuring out that no matter what happens on Wednesday, man, all the chairman's saying is that we're going to 50, and really, I mean, what's more important to the market? Whether we go 75 or 50 on Thursday, okay, or whether he sticks to that rate until he's certain that inflation is back to 2.5% to 3% at least, right? I would say if he's telling the truth, and he's not always telling the truth because he wants to sound as strong as he can to make financial conditions as tight as possible, because it's kind of a self-fulfilling prophecy. If the market believes that the Fed is going to be higher interest rates for longer, that'll cause market participants to pull back their checkbook, tighten things up. It'll create financial tightening. That will cool the economy, which will cool inflation. Doesn't even have to happen, right? If the market just believes that that's going to happen, then financial conditions will tighten because they'll get ready for a Federal Reserve that's going to be higher for longer. So it's almost a tougher situation if they go 50 but say, hey, we're going to slow things down, but the market is well ahead of when we think we're going to cut. We talk to our man Kevin Hincks every Tuesday, Wednesday, Thursday. We're going to talk to him tomorrow. But he was saying last week, man, and I agreed with him, when I was asking him the question, because there's a huge divergence here in terms of what the market thinks the funds rate is going to be at versus what the Fed is telling us the rate's going to be at, because the market's pricing in that we're going to begin cutting sometime next year. And that's being generous, maybe even the middle to late part of the year. If that's happening, folks, there's dramatic impact on this economy if the Fed is ever going to be cutting within the span of about 6 to 9 months. But guess what? We get a glimpse of that on Wednesday. We got markets in positive territory to kick things off. We got some mergers and acquisitions this morning. We got a lot to talk about. We'll be right back, folks. The TFNN Holiday Tiger Dollar Sale is running this week only. We've doubled our normal bonuses, where you can now get up to a 40% bonus on your purchase, and all purchases also receive a TFNN Tiger Mug. Tiger Dollars are good for all TFNN newsletters, trading webinars, and services, so they're a great way to lock in added savings. Don't miss the TFNN Holiday Tiger Dollar Sale, which ends this Monday, December 12th. For all the details, visit the front page of TFNN.com today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sign up for Basil's live webinar, airing this Thursday, December 15th. Basil Chapman will be hosting his first ever live trading webinar, just in time for the holiday season. While Basil will focus on the S&P E-mini futures, other symbols from gold, crude oil to natural gas and more will be traded as appropriate. Basil will demonstrate specific Chapman wave techniques, as well as answer questions live. Spots are limited, and Basil goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right now up by 12 points. We got the NASDAQ 100 up by 29. Going to be interesting to see how we trade into this Fed meeting and how we trade into CPI tomorrow morning. So we're going to jump to this. Do we have enough action this week, man? What to expect in the last consumer price report of the year and what's ahead? The numbers they're looking for. Core inflation seen rising 0.3% in November and 6.1% from 2021. The outlook is going to hinge on goods, housing, and wages. So we get that number Tuesday, the final report of this year, projected to show that while inflation is moderating, it's running about 3 times the pre-pandemic pace, from 2 till 6%, excluding food and energy, as we said. So look for 0.3% on the core on the month, look for 6.1% on the headline number, and look at the estimates in terms of where we are. It is very difficult for analysts to predict anything right now, folks. So that's why when this market really catches a huge bid driving forward, it's like, how do you know where we're going to be, man? The median estimate, okay, this is the economists underestimating U.S. inflation in 5 of the last 7 months. 5 out of 7, it's run hot. The median estimate here is in blue, okay? The actual change in consumer price index month over month is in red. July, we missed 0.5 versus 0.3. In October, we missed 0.5 versus 0.3. The other 5 months, April, May, June, August, quite a beat, 0.3 to 0.6. September, 0.4 to 0.6. Some pretty dramatic numbers in terms of what you're looking for. Price of used cars and medical care services are expected to decline, with the latter largely reflecting updated source data that drove a record drop in the health insurance price index in the prior month's report. Shelter is going to be a big driver of inflation. The October CPI showed a welcome slowdown in rent as well as owner's equivalent rent, which posted the smallest monthly gain since July. There's so many impacts of this. Small categories could also see some reversals after outsized moves. For instance, the cost of hotel stays, up 5.6 in October, expected to ease or even decline. Apparel, also likely to drop for a third month amid high inventory. You got big discounting out there heading into the holiday season. Gas prices have fallen steadily since I saw $2.99 today, folks, somewhere, not myself, okay? One of my friends posted it. But gas prices, nonetheless, nearing $3 in some parts of the country right now. And yeah, look at these different areas in terms of where. Inflation's up 7.7% this year, led mainly by food and energy. Okay, now, the Fed cares about the core numbers. They care especially about PCE. I talked about last week, and maybe I'll talk about it a little bit again tomorrow or something like that, because I had a great article, I think it was on Bloomberg, talking about the differential between CPI and PCE. CPI is what you spend money on. It's actually what you are paying for out of pocket, okay? Versus PCE is the value of what you're consuming, and where that can differ is the PCE ties in everything. So if you have employer health care, that's something you are technically using of value. Meanwhile, you're not paying it right out of pocket. So you have health care being a big component of PCE, but not as big a component as CPI, because you're not paying a lot of those costs. A lot of Americans especially have their employers paying for a majority of their healthcare costs, at least their health insurance. What also translates there, because you have those costs are not a component of CPI, the things you're actually paying for that are big price tags like shelter are a much bigger component of CPI as they are for PCE, because PCE will include many items that are kind of like a third-party payer. Meanwhile, you are absorbing the value of those goods consumed. So nonetheless, it's going to be interesting, man. You look where we are. Fuel and oil, January to October. Yeah, you talk about a rise, man. And this is the 10-month annualized rates, okay? Yeah, fuel pushing like 84.9% from where we were in January to October. Eggs, man. Everyone's talking about eggs, right? Airfares are up. Eggs and butter. Isn't that eggs and butter? Where's bread? Flour, 28%, man. Isn't that butter, eggs, and bread? Nonetheless, you can see the numbers driving up pretty dramatically. So we get CPI on Tuesday, man, and we'll see where we go. Economists expect inflation to cool significantly over the next year. Well, when they say that, folks, to scroll up, keep this one in mind as well. Economists have been very wrong recently. They're wrong 5 out of 7 months, okay? So, yes, there is some consensus there, okay? But, folks, that's a wild one, man. That means that inflation is CPI, okay? And this is not just core or cherry-picked. This is CPI year over year. They expect back to a very tolerable 2.5. Fed will be totally fine with 2.5, man, okay? Because there's going to be some variance. 2.5 is nothing like what we're at right now. And that's like a pro forma balance sheet, folks, okay? Yes, that's a great situation. But this should be the bull case for squashing inflation, not just the base case for squashing inflation, because I don't see how it goes any better than this. If this isn't the bull case for squashing inflation, what's the bull case, right? Whew. Yeah, so this is Carl Riccadano. He's at BNP Paribas. He expects CPI to fall from 8% to 4%, but cutting it in half again from 4 to 2, that's the difficult task. And I would agree, because that's the one that has me craziest of all, 2.5, okay? Yeah, you can make the case you get to 4, all right? But we're talking about 4 on top of like 10, right? So you're compounding some pretty high numbers there. So even a 4% number is going to be bonkers when you're dealing with prices that are already at astronomical levels for many people who are feeling that purse and that wallet stretched as far as they can. And a lot of takes over there. We got wages. That was a big thing that sent things soaring in terms of the jobs number last week. So we're going to get a lot of action, man, for CPI numbers tomorrow morning, Fed on Wednesday. And what do we have going on Thursday, folks? We got our man Basil Chapman hosting a live trading webinar. Why not talk about it right now? We got our man Basil coming up next with the Tiger Technicians Hour, of course. But it's a great week, man. We're not quite into holiday trading yet, that's for sure. We'll see the volatility coming in tomorrow and Wednesday. So we get inflation data tomorrow. We get a Fed meeting announcement at 2:30. And then Basil's hosting a live trading webinar, folks, 8:30 till 2 p.m. We also get retail sales on Thursday morning. Right as Basil is kicking this off at 8:30 in the morning, we get retail sales. We get weekly jobless claims coming in Thursday morning as well. So a lot of potential for a nice trading day on Thursday. Basil will be in there 5.5 hours. $295 is the cost to attend, folks. He's going to be talking about many of the methodologies he uses as well. You can check out all the information on the front page of TFNN, okay? He's talking about moving averages. He's talking about Chapman wave notation. These are patterns and tools that he's going to be presenting on while he's live trading for the 5.5 hours. All of it's archived. You get a month of his newsletter, which is $149, folks, okay? So for you newsletter subscribers out there, it's an absolutely great value. For everybody out there, you get the newsletter for a month. You get to attend the 5.5 hour live trading webinar. With the newsletter, okay, newsletter subscribers always gain access to a plethora of Basil's archive webinars. You get those for a month as well because you're signed up for the newsletter. It's an outstanding value. Basil is a great educator, and this is the first time he's done a live trading webinar. He's going to focus on the S&P E-mini futures, okay, but he'll also be looking at gold if that's moving, crude oil, natural gas. He likes the 3 times long-short index and sector ETFs, which I know a lot of traders out there enjoy as well. Check it out, folks, on the front page, and we'll talk a little bit about our Tiger Dollar sale. That's the way to add savings to everything out there, and that ends today, folks. Stay tuned. We'll be right back. Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back. Excuse me. Welcome back, folks. We got the S&P up by 9 points. Markets open. NASDAQ 100, you're up by 13. We got the Dow up by 89 points right now. Going to be interesting to see where this market goes with a lot, as I said, economic data out there. You almost forgot about retail sales. It's the morning of Basil's live trading webinar going on Thursday. CPI on Tuesday. Fed on Wednesday. Retail sales on Thursday. Jobless claims, among many others, going on in terms of market action this morning. Markets, though, we start in positive territory, and we'll see where the day leads us. Jumping around to some of the articles I had pulled up here. So this one's an interesting one, Shopify. Here, let's jump to the Shopify chart. Now, TFNN uses Shopify, folks. It's an outstanding platform. It really is. But this stock got a little bit ahead of itself, to say the least. Up to 176, down to 23. You're at about $38 right now. Now, you put this back on a monthly. It's remarkable. I was just looking. I think we transferred to Shopify around, it's been about 4 years that we've been on Shopify. It was late 2018, I believe, that we got on there. So Shopify was trading at about $13-15, pushed up to 176 during the pandemic, really accelerated. You're back to 38. Now this one, just an interesting article, man, about the index risk of concentrations, okay? The $118 billion route slows Canada's stellar stock market run. 978 points from the TSX Composite, folks. That's 6%, okay, that index is down. It would only be down 2% without Shopify alone. Now, that is an example of why you better make sure, if you're trading the NASDAQ especially, or even the S&Ps, okay, and I'll pull up the concentrations, because the S&P 500, obviously not as dramatic, but when you're talking about the NASDAQ 100, and even the S&P, you better make sure you know what Apple's going to be doing, man, and some of those other companies as well. Not exactly this type of an impact, but yeah, it's concentrated, to say the least. As that index is down 6+%, and meanwhile it would be down just 2%, the whole TSX, okay? And that's the TSX comp. Yeah, pretty remarkable. 70% plunge for one of the biggest companies out there in the index at the time. Now, this was an interesting one coming into Christmas. I'll pull up the headline of Bloomberg. Dealmakers are in last-minute $70 billion merger and acquisition rush before the holidays. And yeah, quite a weekend, man. So you got, as they put it, Amgen. They're buying Horizon Therapeutics. $27.8 billion deal is what they're paying for Horizon. And that's 8ZNP. There's a nice pop for you. Up about 12-13% so far this morning. That deal valued at $27.8 billion. You got Horizon trading higher, obviously. Amgen, a little bit lower this morning, although they like that market action. They catch a little bit of a bid on the market open right now. So it looks like they like that buy for Amgen, buying Horizon Therapeutics. Yeah, not a bad deal. $27.8 billion. What else do we get? Microsoft. The London Stock Exchange. I wonder how they're going to be doing with nickel. Are they going to allow everyone to keep trading nickel? I joke somewhat, okay? But this deal has to do with the cloud. So Microsoft, they're going to buy 4% of the London Stock Exchange. That's valued at around $2 billion. They're going to spend a minimum of $2.8 billion on cloud services. Not a bad deal, right? They're buying a 4% stake in a $2.8 billion cloud computing deal that pushes big tech further into the financial markets. I would say they're going to spend at least that amount on cloud services with Microsoft over the next 10 years. Not a bad deal, right? You pay $2.8 billion to buy a 4% stake, and they say, we'll give you that money back over the next 10 years for the goods that you are producing. Yeah, and they need some cloud. Microsoft's got it, and interesting to see how that deal gets set up. Seems like it's a pretty good deal for Microsoft, as they just are literally taking stakes in companies that are using their cloud computing, right? I guess the right companies, too. And what else? Thomas Bravo. Yeah, there was a little bit of a battle there in terms of a bidding war. And Coupa is what they get. Coupa Software, $6.2 billion. Yeah, as they outbid Vista Equity Partners. Pretty interesting to show up on Monday morning as we come into the holidays with that many deals. But guess what? The year ain't over, man. The year ain't over. And if you're looking for an acceleration next year, especially these growth stocks, I was thinking about this weekend myself. A company like Roku or something like that, right? I mean, at some point, if you're ever going to purchase, let's say Netflix wanted to buy Roku, which is completely feasible, okay? You jump over to Netflix this morning. They're trading basically flat. You jump over to Roku. They're down 31 pennies at 51.45 so far. Some of these companies have been so rate sensitive that if you were going to purchase one of those companies, you might want to start thinking about getting ahead of a Fed pivot in the next 3 or 6 months, because that could put some fire on some of these growth companies, especially, right, when interest rates are so high. But nonetheless, we'll see how they go. But man, coming into Christmas holiday, pretty remarkable. We got Christmas in 13 days, man. Jumping around to some of the other companies. Weber, the maker of grills, they are getting taken private, man, to the tune of $2.32 billion in cash. They closed Friday at about $6.50, and that deal is going through at $8.05. And it looks like that deal's pretty much priced in with it trading at $8. Let's see, they're going to be taken private by BDT Capital Partners for $2.32 billion in cash. $1 billion is a lot of money, but Weber is quite a great brand. I would say their brand awareness, some of the best out there when it comes to grills, quality, etc. I think they got, like a 10-year warranty for Weber, and if you keep that thing well, you could probably have it for decades in terms of those Weber grills. Expensive these days, though, to say the least. But yeah, $2.32 billion are getting taken private. All right, jumping around to some of the other equities we got moving a little bit this morning. We got some upgrades. We got Under Armour. They're getting an upgrade. Let's see if they hold on to it. They're up by 3.5% this morning. Stifel upgraded them to a buy from a hold. The athletic apparel maker's inventory management gives the company better profit margin certainty. Interesting. You jump over to Best Buy. Goldman upgraded them to neutral from a sell. Not quite the same. They're up by 0.3%, but they are they up by 0.3%? Where did they close at Friday? It's a weird chart. This shows they're up by 26 cents. But look at Friday's close. How's that happen? Where did they close at Friday? Nonetheless, Best Buy trading at about 81.15. Yeah, not sure how that plays out. Right? Let's see. Gap, Tapestry, Levi Strauss. Goldman upgraded Gap and Tapestry to a buy, while downgraded Levi. Jump over to those. GPS gives back their pop. We're up by 1.1%. Tapestry, same thing, gives it up, and Levi's got a downgrade. Probably not what you want to see, down about 1.3%. All right, folks, I referenced it in the last conversation when we were talking about our man Basil Chapman. The best way to sign up for Basil's webinar or to sign up for anything we do at TFNN, folks, is to go over there and get some Tiger Dollars for the holiday sale. You want to make 40% on a trade today? Go buy some Tiger Dollars, folks. This sale ends today. The last day, we've doubled the normal bonuses you get. Okay. Now, if you're new to TFNN, folks, Tiger Dollars can be used for any newsletter. They can be used for any live trading webinar, any service, TAS profile scanner, the art of timing the trade charts, etc. You spend $500, you get $600 Tiger Dollars. That's a 20% bonus or 100 free Tiger Dollars. You spend $1,000, you get 1,300 Tiger Dollars. That's a 300 Tiger Dollar bonus or a 30% bonus. You spend $1,500, you get 2,100 Tiger Dollars, folks. That's 600 additional Tiger Dollars, completely free. And we're going to be sending everybody a TFNN mug on top of it. It ends today, folks. Check it out. We only do a couple of these a year. Can't beat it. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps hanging out to gains by about 4 points right now. You get the NASDAQ 100 rolling into the red. You're negative by 9. You get the Dow up 90 points right now, but the Dow gives up about 50 or 60 points from that spike high you got. Dow traded to a high of 33,891, so you get about 60, 70 points. You get the Russell in negative territory. Crude catches a little bit of a bid, up $1.38 to 72.40. You get the gold contract down about $13. We jump over to the dollar index. Dollar index, a little bit of a pop, up to almost 105 on the open there for the dollar. And we jump to notes and bonds. We're sitting pretty much where we were coming into the opening bell, with the 10-year up 6 ticks and the 30-year up about 25 ticks. Let's jump around to some of the FANG stocks, see how we're trading this morning. We got Amazon coming into the holiday season, down about 0.5%, 88.64. Quite a price tag for Amazon, man. You talk about a pullback. 88.65, you give up $100 square on Amazon to 88.54. Pretty remarkable, man, coming down. I mean, COVID lows. Who had Amazon trading to the COVID lows, man? Absolutely remarkable, this market. Don't think you ever know more than the market, folks. Apple down about 0.25% right now, trading at 141.81. We jump over to Microsoft shares with their deal for the London Stock Exchange. Looks like the market likes that as they get a lift of about 1.5% from Microsoft shares. We jump over to Tesla. Yeah, I'd be careful of this one, man. Tesla's got a lot of problems, and Elon is very distracted right now. No matter what you think of his Twitter escapades and his politics, very distracted. That's an undeniable fact, folks, from what's going on at Tesla. Seems like they need some attention. And it's not just the stock chart. They have underlying fundamentals that are impacting, whether it's China, right? Tesla down 2.8% today to 174 on Tesla shares. We jump over to Netflix. Netflix down about 0.9% right now. We got Disney shares down about 0.5% right now. Yeah, let's jump around to some of the banks, see how they're trading right now. Bank of America. Yeah, we got negative action right now. Bank of America down about 0.9% right now. We jump over to JP Morgan, down about 0.2% right now. Let's see how some of the airlines are trading. We got American up about 0.5%. JetBlue up about 0.1%. They've been the dog, man. Check out that dog. $7 and change from $21 and change last year. Delta chopping around. We check out some of the cruise ships. Yeah, this one, man. You're looking at these cruise ships. Just make sure you got that channel line on your chart, man. The cruise ships. Watch out. Carnival, just right in smack dab in the middle of it. But boy, pretty decisive, right? How many times have we hit the bottom line of this channel? I mean, you almost can start it where the trend started going back to April of 2021. That's a 1.5 year channel line, folks, in terms of where you're trading down. 1, 2, 3, 4, maybe 5 times almost on the downside. Pretty similar action on the upside for Carnival. Norwegian, a little bit of a different story. Now, this uptrend channel, so much for that. Decisively breaks out of it, starts a new downtrend channel. We're going to remove that one. Okay. And we're going to zoom in. Let's put it on a daily even. Zoom in on just that recent channel. I'm going to extend that line to the right because, it broke out of it. Yeah. So maybe if you're looking for a buy from Norwegian, you let it come back and test this channel line. And if you're looking for a buy in either of them, that's maybe what I do there. Because, if you're looking for a buy in Carnival, you're in no man's land right in the middle of that channel line on the downside. Norwegian at least breaks out of it. And maybe you see a little bit more negative action before that might be a buy for Norwegian to the downside, maybe about 12.50 or so. See how you come into that area for Norwegian. As we speak, we got the Dow up 122, S&P's now up 6, NASDAQ barely in the red by about 2 points so far this morning. And it's interesting because most of the FANG stocks, right, were lower. Yeah, you got Apple's down 0.2%. Well, now Microsoft is putting the lift. That's what it is. Microsoft's up 1.5%. Let's see how Google's trading. Google's up 0.3% as well. Yeah, and if you're looking for some action on Google, the 618 there, about $90 on Google shares. Let's see how Shopify's trading this morning. Getting some press out of Bloomberg. Down 1.1%. I think we all got a lesson on multiples, folks. That is for sure in a big way. All right, what else we got going on? AutoNation, speaking of the buying spree, they're buying mobile car repair startup for $190 billion. Not bad. AutoNation, they're going after more companies. Mobile car repair startup that counts Mercedes and Porsche among its investors for $190 million. Founded in just 2018. Not bad, right? Not bad at all. And how are these car dealers gonna shake out, man? Because I was talking about Carvana last week. Boy, not many of us are gonna end up with $6 or $7 billion, folks. But if you ever do, what's it? CRV, Carvana, CVNA. Down another 3.2% for Carvana shares. From 376, yeah. And the son, Garcia III, he had about $6.7 billion, and now he's got about $100 million. $100 million, man. A lot of us would enjoy life with that money, but it ain't $6.7 billion. And if you got $6.7 billion, I would encourage you not putting it in one equity. But hey, that's how Zuckerberg becomes almost the richest man in the world before he loses practically $100 billion of his own wealth, right? All right, let's see what else we got pulled up in terms of markets and what is moving this morning. It's all going to be waiting for the numbers, folks, in terms of where we come. We got CPI tomorrow. We got the Fed on Wednesday. We got retail sales on Thursday. Earnings season basically over at this point. I will go over, why not, just for a brief moment. I've been talking about it in terms of the Fibonacci numbers, folks, okay? You take a look at where we just were, all right? Now, I'm taking kind of the baseline that we hit on the candles in terms of the high of about 4,300 to the low of 3,600. Yes, you did get that spike low to 3,500 on October 13th, okay? But you cherry pick off that tail. And you're looking at an area that basically hit the 618 on November 15th. You hit that 618 of November 25th. You also hit it on that area on November 30th, just got above it. And then what did you get? What did you get when you got above the 618? You got 1, 2, 3, 4, 5 straight red days like that. We're now back to almost the 50%. We're coming into some pretty important dicey areas. But guess what? Market's finding a bid, folks. Can't hold a good market down, man. Look at this market. Interesting as well that when I back this up, and I'm going to put this on the 20-day so you can see the action on Wednesday, the action on Friday. Okay, we're bumping into just basically where we were in the beginning of that acceleration for Wednesday, and I believe that was Fed speak, Mr. Powell, right? Yeah, 1 o'clock, the day accelerates higher. So kind of a decisive area, as in the market saying, you know what, we're having a hard time getting above where we were because, yes, the chairman indicated we're going 50. There was already a lot of talk about going to 50. And as I said at the beginning of the program, what's more important, whether you go from 50 to 75, right, as in if they go to 75 or if they go to 50 this meeting, or where the chairman's head is and the members of the Federal Reserve Board when it comes to what those rates are going to be for the next 6 or 12 months. Because I will tell you, folks, that whether the Fed goes to 50 or 75 on Wednesday, it's a lot more important where they plan on keeping those rates for the better part of 2023 and how much real data they need before they're willing to, number one, stop raising, okay? And number two, actually consider cutting. What are the economic situations that yield a cut in 2023? Think about that, because they are not good. We got one more segment, folks. Stay tuned. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P's up by 8 right now. Excuse me, trading at 39.76. We got the NASDAQ 100 in the green as well. You got the Dow up 108. NASDAQ getting helped by Microsoft for sure, as Microsoft extending those gains now, up 2.4% for Microsoft shares. We jump around to some of the other FANG stocks. Apple down about 0.25%. Make that flat right now for Apple at 142.15. We jump over to Google, catching a little bit of a bid on the open. Google up by about 0.5% right now. Let's check in on Meta. How's Meta doing? Down about 0.7% from Meta shares right now as we come into a very important week of economic data. Don't forget about the TFNN Tiger Dollar sale, folks. It ends today. You can get a 40% bonus on your purchase, 30 or 20. We've doubled all the bonuses. Normally, they're usually 10, 15, or 20%, folks. Right now, you can get up to a 40% bonus. We'll be shipping everybody a free TFNN Tiger mug as well, as I got this morning. I actually love them. They came out actually pretty awesome. They did. And we don't even sell those on the website right now, so a nice small little gift to say thank you for those of you supporting us out there, because, folks, we couldn't do what we do. You know, I'm emailing a lot of people during this Tiger Dollar sale, checking in with them, sending them Tiger Dollars. People have questions. If you're new to TFNN, folks, my email's Tommy, Tommy, at TFNN.com. My dad is OB1 at TFNN.com, OB and just the number 1. And we got our man Jacob at TFNN.com. Feel free to email any of us anytime, man. Ask us a question. You can email the host as well. I encourage you to check them out. Current subscribers out there, go get some Tiger Dollars, man. Apply them, and they'll be done. And, boy, you got it, man. Just like that. Can't believe we're coming into Christmas. 13 days. Have you done the shopping, folks? Have you? Let's jump around to some of those stocks. Amazon, back to flat this morning. We jump over to Macy's. Macy's? Ooh, not so much, man. Macy's down from $23 just on Thursday. Let's check out this chart real quick. They got quite a lift recently, right? They had some strong numbers on their earnings. Yeah, and look at that, man. You're almost giving it all back for Macy's in terms of that acceleration on their earnings numbers, back to 21.66. We saw a couple upgrades for Gap this morning, right? But they get back the gains, most of up about 0.5%. All right, folks, thanks so much for starting your trading week with me, and stay tuned. We got our man Basil Chapman coming up next. And when you get those Tiger Dollars, I encourage you, think about going to Basil's live trading workshop on Thursday. I'm going to be in there when I can, watching Basil. First time ever live trading at TFNN. Thanks so much, folks. Stay tuned. Have a great Monday. We'll talk to you tomorrow.